Welcome to this tutorial to learn more about the Labor Rate Analysis Report in the Labor Pricing for a Profit software version 6.0. The Labor Rate Analysis Report answers those two questions that you hear on a regular basis. The first is, why do we need to charge so much? Well, your labor rate is what it is for a reason, and this report will tell you exactly why you're charging what you do. The other question or scenario that comes up is that technician who's out in the field working and says, well, wait a minute, I'm getting paid $15, $20, $25 per hour, whatever the number is, and I know that the boss is charging the customer $95, $100, $120 an hour or more. I'm doing all the work, yet he's getting rich. I don't like this. I can go into business for myself and make more money. Well, we both know that he just doesn't realize what it really costs to run a business. And the Labor Rate Analysis Report will show exactly what it's costing to run your company. Let's go ahead and take a look at this report. To access this report, we'll first make sure that we're in the Reports section of the left-hand toolbar. Once there, we're going to click on the Labor Rate Analysis icon, which is the fifth item down. Once we click on this icon, the Labor Rate Analysis Report itself will open up and display on the screen. Now, as with all of the reports in the software, your individual departments are shown at the top. So we can see in our company we've got two different departments that have labor associated with them. Okay, in reality, this particular company has three departments. One of those is a retail store. In your retail store, you don't have any labor, and so it won't display in the Labor Rate Analysis Report. On the lower half of the screen, there's a lot of information. It's a small report, but it's jam-packed with information. So I'm going to walk through it one step at a time to help you understand exactly what's here. Now we're looking at just our service department, and in our service department we are currently set for a return on income of 15%. In other words, we're looking for a net profit of 15% before taxes at the end of the year. Now in our service department, we are projecting, based on all of the overhead expenses that you entered in and allocated to the service department itself, that our total business overhead for the service department is $279,036. In other words, all the labor, all the overhead, all the materials, everything that we have in this department is going to cost us $279,000. We have to pay for that somehow. Now, as we walk down on this report, we can see for the first section is the overhead absorbed by non-labor sales. Non-labor sales is basically going to be materials, subcontractors, and other income. So in our company, we first have on this line here material sales. It's showing that we're going to have $100,000 in material sales throughout the course of the year. Now we have to pay for those materials, and our cost on those materials is $50,000. So we're going to subtract the $50,000 from the $100,000 revenue that we're going to see from selling those parts. We also said that we wanted to generate a 15% net profit before taxes. Now the software is going to make sure that the labor pricing that it ultimately projects is going to net 15% net profit. So the first thing we're going to do is we're going to take 15% of the total sales of this material off the top and set that aside, because that is that 15% target that we're looking for. So we're going to subtract the $100,000 sales, we're going to subtract $50,000 that we're going to have to pay for those parts, and that $15,000 in profit, and we still have $35,000 left to offset some of our overhead. Now in our particular company, we also had, if I scroll down a little bit farther, some other income. We had some other income that we entered in of $20,000. Now again, we're going to make sure that we hit 15%, so we're going to set 15% of that, or $3,000 aside, and when we subtract that out, that's an additional $17,000 in revenue that we have to offset the cost of our overhead. So when we scroll down a little bit farther on this list, that's a total of $52,000 in profit and other income that will go toward offsetting some of our overhead. So when we subtract that $52,000 from our total business overhead, we still have $227,036 left that needs to be absorbed from something, and that something is going to be our labor rate. So now let's step down one step farther into the labor overhead rate calculation box. We simply took this $227,000 from the section above and transferred it right here into the remaining overhead item. Based on what you entered into the software for your field labor guys for this department, we're seeing we've got 2,395.4 billable hours to spread that overhead across. So when we divide that out, our labor overhead rate, in other words, all the overhead for everything other than our field labor itself, the wages, it comes out to $94.78 per hour. Let's move down one more box into the hourly rate breakdown. Now, the average field labor rate, the wages that you entered into the software for your field labor guys allocated to the service department, averages $20.63 per hour. The next item down is that overhead labor rate from the calculation above is $94.78. And we said we want a 15% net profit before taxes. So that's going to be an additional $20.37. When we add those three together, that gives us our hourly rate of $135.78. Now, when I look at this, I know what this first item is. That's what I'm paying my guys. I know what this last item is. That's my profit that I'm going to get for every hour that I bill out. But this $94.78 is still an awfully big number. What makes that up? In the labor rate analysis report, we also have a second tab found right here called labor rate breakdown. And what this is going to do is it's going to look at that $94.78 and tell you exactly to the penny what makes it up. So let's go in and take a look at the labor rate breakdown for our service department. And we start out with our variable expenses. We can see here that bad debt, out of every single hour we bill out, $6.68 is going to go toward paying for bad debt. We can see that $5.64 out of every hour we bill out in the service department is going to go to put gas in the trucks. As we go down a little bit farther, we can see that $1.40 goes to pay for the cell phones. $3.63 goes to pay for workman's comp. As we scroll down farther on this list, we can see our equipment replacement fund. $7.51 out of every hour that we bill out goes to pay for replacing our trucks. And the next line down, that single greatest expense we have in our company, $20.50 out of every single hour we bill out goes to pay for non-billable time. So we can scroll all the way down on this list and find out what makes up our hourly rate to the penny. Every single expense that we have allocated to the service department will show up on this list. So again, it answers that question. Why do we have to charge what we do? Now we know. Now this report also has in it the modify method box here, and we can again click on modify method. Now let's say instead of charging $135 per hour, we want to charge $140. We can simply come in here, change this to $140 per hour, click on OK, and it will recalculate this report and show us the values based on $140 per hour. Now, all of these individual overhead expenses are really going to remain the same. The one item that will charge is that remaining profit that we just hit is now going to go straight to the bottom line in desired profit. So our profit is now $27.09 versus the $24 that we had earlier. Well, this concludes this particular tutorial. I encourage you to take a look at the rest of the tutorials to find out all the powerful information that the labor pricing for software can tell you about your company. Thank you.